Hello students and welcome back to my accountancy class. Hope you all are fine and safe at your home. So we have discussed the rules of debit and credit in our previous lectures. Hope you have understood clearly and noted down in your notebook. So today we are going to solve some questions. Let's see question number 1. Classify the following accounts into personal, real or nominal account. As we know that there are three types of accounts. First is personal, second is real and the third one is nominal. So these are some items. These are some 23 items that you have to identify each item, whether they are of personal or are of real or from nominal account. Okay, so let's see the solution. First, make a table, personal account, real account, and nominal account. Then one by one, we will write each transaction under their heads. Okay, so let's see. Let's analyze all the items first. Okay, so capital. What is capital? Capital is the amount invested by the owner, and owner is what? Owner is a person. So capital is a personal account. Now the second one is drawing. Drawing is the amount that an owner withdraws it from the business. So it will also be the personal account. We'll write P in front of it. Okay. Now the third is cash paid. Cash, cash is an asset for a business. So all the assets are related to which account? All the assets are related to real account. So cash paid will be the real account. Okay, so we will write R in front of it. Fourth is cash received. Now what is this? Cash received. Cash is involved. Cash means asset. Asset is related to real account. So we will write R again. Now the fifth one is commission paid. Now here, what is this commission paid means? Commission paid means you had given commission to someone, anyone. Okay, so this is your expense. Okay, commission paid is your expense. So expense is related to which account? Yes, expense is related to nominal account. So this fifth transaction or this fifth event is nominal account. So we will write N. Okay. Now the sixth one is commission received. This will also be the nominal account because this is the revenue. We are receiving money as a commission. Okay, we are receiving commission. That means this is the revenue and all the expenses and revenues are related to nominal account. So we will write N for our convenience. Okay. Now the seventh one is purchases account. Now what is this? Purchases account is which account? Yes, purchases means you are expensing, right? You are incurring expenditure. This purchase is expense and expense is related to nominal account. Now sales. Eighth one is sales. What is sales? When we sell our goods and services is called sales and we receive some money. Okay, so we are receiving revenue and revenue is related to nominal account. Ninth one is furniture. What is furniture? For a business. Furniture is an asset for a business. So furniture will be the real account. Cash account. What is cash account? Cash is what? Cash is an asset for a business. So cash account is an asset. So that's why it will also be a real account. Bank account. We have seen that a bank account is personal account. being it is the asset, but we will treat it as personal account. Why? Because bank is an institute or company or a business are considered as artificial person. So that's why this bank account is personal account. We will treat it as a person, an artificial person. Okay. Likewise, the bank overdraft. This will also be the personal account. Debtors. Debtors are the asset of the business, but we will treat debtor as a personal account because I have explained you in some previous lectures. Okay. Now the creditors. Who are creditors? Creditors are the person from whom we purchase goods on credit. We did not give them money. Okay. So creditor are the person, so that's why they are the personal account. फिर 15th item is traveling expenses. This is an expense, so it is related to nominal account. 16th is goodwill. Goodwill is an intangible asset, right? Goodwill is the reputation that we cannot see and we cannot touch, but they are assets, so they are related to real account. 17th is patents. What is patents? Patent is an asset for the business, so this will also be the real account. Salary account. Salary means you are giving some wages to your employees. Okay, so this is an expense. An expense is nominal account. The 19th one is salary outstanding account. We have seen that any prefix or suffix is added to the item of the nominal account, it will become the personal account. Okay, so salary outstanding account will be the personal account. 20th is insurance account. Insurance is expense for a business, so it will be the nominal account. Okay, so next is insurance prepaid account. We have discussed earlier that any item of nominal account is added with the suffix or prefix, it will convert it into personal account. Okay, so insurance, in the word insurance, we had added a suffix of prepaid. Okay, so it will become representative personal, so we will treat it as a personal account. Okay, now the 22nd is bad debts written off. First of all, we need to understand what is bad debts. Okay, so bad debt is the amount that we are not going to receive that amount. For example, I had borrowed 10,000 rupees from you people. Okay, and I told you that I will return it back to you after 1 month, but I didn't. Okay, and I left the country. So that 10,000 for you will be the bad debts because you are not going to get in the future. Okay, so bad debts written off. This is an expense for you. This is the loss for your business. Okay, so this will be treated as nominal account. Now, if I return back to India and I remember that I have taken 10,000 rupees from my students and I have returned back it to you. So that bad debts amount will be recovered. So this will be your profit. Okay. So 23rd is saying bad debts recovered. You have recovered that bad debt amount. Okay. That 10,000 rupees, you had recovered it. So it will be your gain, it will be your profit. So all the profits and losses and gains and expenses, these are what? These are related to nominal accounts. So this will also be the nominal account. Okay. So after classifying all these things roughly, now note it down in these tables. Okay. So under the head personal account, write all the items that are related to personal account. After that, all the items that are related to real account, write it down. Then after that, in the same way, the nominal account. So this will be your solution. Okay, so you have to know each and every items and each and every account. Then and then only you can identify and classify each and every transaction into the different types of accounts. Okay, let's move to the next question, which says on which side the increase in the following account will be recorded. Also mention the nature of account. These are some items given to you: furniture, rent paid, commission received, salary paid, proprietor's account, debtors, creditors, and you have to mention the nature of the account. Okay, and also you have to uh, tell that in which side you will write it down when they are increased. Like furniture is increasing in your business, then it will be recorded on which side? It will be recorded on debit or credit. Okay, so let's see how we are going to solve this question. So first of all, make a table for the clear understanding. After that, write all the transactions. Oh, sorry, write all the items like furniture, rent, and so on. Then identify which nature of account it is related to. Furniture is related to asset, rent is related to expense, commission is what? Commission received. You are receiving a commission. That means you are gaining something. Okay, so gaining something means you are earning revenue. Salary paid is an expense. Proprietor's account is the capital. Then debtors are the asset. Creditors are the liability. Okay, so we have mentioned all the natures of the account. Okay, now we have to record in the debit or credit if they are increasing, as they are saying in the question, on which side the increase in the following account will be recorded. If furniture account is increasing, then we will record in which side, debit side or credit side. So we have discussed some rules. Let's see what were the rules that we have already learned in the previous lecture. So this was the table that I had made for you all to learn. Okay, so according to the modern approach, there are 5 classification: capital, liability, expenses, assets, revenue. And we have seen that expenses and assets are treated as same. If expenses and assets are increasing, so we will write it on the debit side, and if it decreases, we will write it on the credit side. So furniture is what? Asset, and asset is increasing, so we will record this furniture on the debit side. Okay, now second is rent paid, that is expense, and expenses, when expenses are increasing, we record it on the debit side. Okay, now the third is commission received. Commission received is revenue, and revenue is when revenue increases. When revenue increases, we record it on the credit side. So we will record it on the credit side if a commission received increases. Okay. Now the fourth one is salary paid. Salary paid is an expense, and if expense increases, we'll record it in the debit side. So we will write debit. Next one is proprietor's account. Proprietor's account is what? It is the capital. Okay. So if capital increases, it will be credited. So we will write credit. Okay. Debtors. Debtors are what? Debtors are assets. And if assets are increasing, we'll record it in the debit side. Okay. Now, the last one is creditors. Creditors are liabilities. So, liability increases, we'll record it in the credit side. So, this is how you are gonna solve these questions. But for that, you have to learn these things. Okay, students? Now, move to the next question. It says, On which side the decrease in the following accounts will be recorded? Also mention the nature of account. Like we have solved the question number 2. Likewise, this question is also the same. Okay. In this question, you have to record in the debit or credit side if they are decreasing, as it is written here, on which side the decrease in the following account will be recorded. Okay, so pause the video and solve it by your own. Then resume it and check your answer. Okay, so we will make that table again and we'll write all the transactions one side. Then we will classify the nature of account they are from. So cash is asset, bank overdraft is liability. Okay, overdraft means you are withdrawing beyond the limit of the bank balance. Rent paid is the expense. Outstanding rent is liability. Outstanding rent means what? The rent that you have to pay. The amount is due. So this is your liability. This is your responsibility to pay. Okay. Prepaid insurance is asset. Virajman, the proprietor of the business. Virajman is a person who is the proprietor of the business. So this is what? This is capital because Virajman is a owner of a business. Proprietor means owner. Okay. So now it's time to record it on the debit or credit side. So where will you record cash if it decreases? Cash is what? Asset. And if asset decreases, we will record it on the credit side. Okay. Now, second, bank overdraft. Bank overdraft is what? It is a liability. And if liability decreases, it will be debited. Third point, rent paid. It is an expense. And if expenses decreases, it will be recorded in the credit side. Next is outstanding rent. This is the liability, and if liability decreases, it will be recorded in the debit side. Fifth is prepaid insurance. It is asset, and if asset decreases, we'll write on the credit side. Virajman, the proprietor of the business, means he is the owner, and if capital decreases, so capital will be decreased capital will be recorded in the debit side. Okay. Now let's move to the question number 4. From the following transactions, state the nature of accounts and state which account will be debited and which account will be credited. Now here are some transactions that you have to analyze and you have to state the nature of the account and you have to write it down that whether they will be recorded in the debit side or credit side. So I will suggest you to copy down this question and these transactions in your notebook right now. Okay, so we'll see the solution, how we are going to solve this question. Okay, so for that we have to make a table in which first column will be for the transaction, second accounts involved, nature of account, then effect of account, then debit and credit in rupees. Okay, the first transaction was Abhendra started business with cash rupees 2 lakhs. Okay, so Abhendra is an owner and he wants to start a business with cash rupees 2 lakhs. So in this transaction, how many accounts are involved? First one is cash and capital. Abhendra and cash. We can say that Abhendra is an owner. Owner is capital. Okay, so capital account is affected in this transaction. So capital account and cash account. As we can see that cash is coming in and who is giving cash to the business? Abhendra, the capital, the owner. Okay. So cash is of which nature? Cash is what? It is an asset and capital is what? It is a capital only. Effect of account. See, cash is coming in. Okay, so cash is increasing and capital is also increasing. Okay, so when asset increases and capital increases, we will write on which side? When asset increases, we'll write on the debit side, and when capital increases, we'll write on the credit side. Okay. Now, the next transaction is purchased goods for cash rupees 60,000. Now, Abhindra has purchased goods for cash rupees 60,000. What type of accounts are involved in this transaction? Purchase and cash. Purchase account and cash accounts are involved in this. So, purchase is of which nature? Purchase account is of which nature? It is of expense, and cash account is asset. So we have mentioned the nature of account also. Now here, purchase means that is expense. Expense is increasing and cash is decreasing, because when you purchase goods, you pay money. So your money is transferred to that person. Okay, so cash is decreased from your side. So expense increases and asset decreases in this transaction. Okay, so in this transaction, purchase goods for cash rupees 60,000. Which type of account is involved? First one is purchase account. The second one is cash account. Okay. Purchase is what? Purchase is expense, and expense are increasing according to this transaction. Likewise, cash, that is an asset, and asset is decreasing. So when expenses are increasing, we'll write on the debit side, and when assets are decreasing, we will write it on the credit side with that amount. Now let's see the third transaction. Sold goods for cash rupees 75,000. Now you have sold the goods of your business for rupees 75,000. Okay, so which accounts are involved in this transaction? First one is cash and the second one is sale. Okay, so sales and cash are involved in this transaction because you are selling your goods. Okay, and you are earning some money. So cash and sales. In this transaction, cash is what? Cash is asset and sales is what? It is revenue, because you are earning revenue, you are earning some money, income. So asset and revenue are the natures. Now cash is increasing, right? Because you are earning money, you are receiving cash. So cash is increasing. That means asset is increasing, and sale, that is revenue, that is also increasing. So in this case, asset and revenue, and they are increasing. So when asset increases, we will record it on the debit side, and when revenue increases, it is recorded on the credit side. Okay. Have you understood? Now let's move to the next transaction. Fourth transaction says that purchase goods from Viraj on credit for rupees 80,000. Now you have purchased goods from Viraj on credit. On credit means you haven't paid money yet. So in this transaction, which accounts are involved? First is purchases. You are purchasing something. Okay. And the second is Viraj. Viraj is the person from whom you are purchasing your goods on credit basis. So purchase and Viraj are the accounts that are involved in this transaction. Okay. So purchases account and Viraj's account. So here purchase is what? Purchase account is expense. Okay, and Viraj is liability, because he is the responsibility that you have to pay after some time. 80,000 rupees have to paid to him. Okay, so purchase is expense and Viraj is liability. Here, purchase means expense. Okay, so it is increasing because you had made an expense, purchased a goods of 80,000, so it is increased. And Viraj, the liability is also increased. Liability is increased. So we have seen in the rule of modern tradition, when expense increases, we write it on the debit side, and when liability increases, we write it on the credit side. Okay. Now let's move to the next transaction, that is fifth one, which says sold goods to Sanskar on credit for 50,000. Here we are selling goods to Sanskar on credit. That means we are not receiving any cash or any money. Okay, just we have sold our goods to him. Here Sanskar is our debtor, and debtor is what? It is an asset. Okay, so let's see in this transaction which two accounts are involved, Sanskar and sales. Okay, so Sanskar is asset because he is debtors for our business. Okay, he is the debtor for our business, so that's why it is he is an asset. Next is sale. Sale is revenue. Here asset is increasing, means this debtor Sanskar is the asset and it is increasing. And the next is the sale, that is revenue, it is also increasing. So the effect of account will be the increase. Okay, Sanskar account and sales account, that is asset and revenue, both are increasing. So we have learned that when asset increases, we record it on the debit side, and when revenue increases, we record it on the credit side. Okay. Now let's see the sixth transaction, which says paid cash to Viraj 20,000. We have purchased some goods from Viraj, right? In the fourth transaction, we had purchased some goods on credit of 80,000. Now we are paying to him 20,000. Okay, we are paying cash to Viraj 20,000. So here, which two accounts are involved? First one is Viraj's account and the second one is cash account. So Viraj account is involved and cash account is involved. So here Viraj is what? Viraj is our liability. Okay. In the fourth transaction, according to the fourth transaction, Viraj is our liability. Okay. So when we pay off our liability, that means liability is decreased. Okay, so this Viraj is of which nature? Viraj account, liability, and cash is asset. Okay, so Viraj is the liability for our business, and when we are paying him off, the responsibility will be decreased. So the liability will decrease and asset will also decrease. That means we are paying cash. That's why the asset is also decreased. So we have learned that liability decreases. When liability decreases, we'll record it on the debit side, and when the asset decreases, we'll record it on the credit side. Okay. Hope you people have understood that how we are going to solve these kind of question in this chapter. Now I will explain you some steps that will help you to make it easier to solve this question. The first step is know the meaning of the three accounts. Means you should know the meaning as well as the rules of the three account, that is personal account, real account and nominal account. Now, the second step is classification of account. Third is step one and step two will help you to recognize whether it will be recorded in the debit side or credit side. Okay, let's see it with some example. Okay, so in our previous question, in question number 4, the transaction number 1 was the Abhendra started a business with cash. Okay, so in that transaction, two accounts were involved, cash account and the second is capital account, the owner's account. Okay, we cannot write owner account. We write capital account. Okay, so cash account is what? Real account. And capital is what? Personal account. Okay, capital account is a personal account because it involves an owner. An owner is a person, so that's why it is a personal account. Cash is an asset, so that's why it is a real account. Okay. So real account says that debit what comes in and credit what goes out. The rule of the real account says that debit what comes in and credit what goes out. The golden rule that we have studied in some previous lectures. Okay. So likewise, personal account says that debit the receiver and credit the giver. Okay, so in that transaction, then it says that Abhendra started a business with cash. In business, cash is coming in. Likewise, capital account is what? It is an owner's account. Okay, so owner is giving cash to the business. Okay, so owner is what? He is the giver. Now, the cash that comes in, we will record it on the debit side as per this rule. This rule says that debit what comes in and here cash is coming in. Okay, so we will record it on the debit side. Likewise, capital, that means owner. Owner is the giver and we record the giver on the credit side according to this rule. This rule says that personal accounts rule says that debit the receiver and credit the giver. So we will record it on the credit side. Okay. Hope you people have understood these steps. If you will learn these steps carefully, you will be able to solve the questions. Okay. So hope you people have understood today's lecture. So thank you students. Have a nice day.